Hello traders, my name is RJ and today we are going to be looking at gold alternative. For those who love gold and don't have much to trade, and for those stubborn enough to think you can trade gold with $100 or even $1,000 account, the solution is New Zealand USD. Why? Because New Zealand USD is a commodity currency. New Zealand USD, New Zealand responds to trade and economic activity from countries like China, Australia, the United States, and the European Union. Just think New Zealand USD as gold stream. Okay, if you don't have money to trade gold, then the next thing that should be on your mind is New Zealand USD. Okay, and another advantage of trading New Zealand USD is that it is linked and controlled by factors that doesn't change randomly, like economic data, interest rate, commodity prices, and overall market sentiment. So today we're going to be looking at what New Zealand USD have for us, then we go all in. Alright, let's start. Okay, the swing we have in this PA, which is New Zealand USD, is a 7 swing to the downside, which is 1, 2, then we have 3, 4, 5, 6, 7. Is a clean 7 swing to the downside. After a clean 7 swing, the next thing we have is what? Impulse, which means we are beginning a new impulsive wave trend on New Zealand USD. This is monthly time frame, don't forget. In validation level. So this is 7 swing on the downside and we're breaking an impulse. Alright, so now we're going to shift our focus to the downside. So we see more of what is currently happening on New Zealand USD. Now this is how we won. This is how we won. So let's go to the weekly time frame. Alright, what we have on the weekly time frame is a clean 5 impulsive subwave, which give us a 1 or A. I recommend that we go for A because when you look for tree in nature, The nature is what? The nature is on your side. You look for tree in nature. The nature is on your side. You have A, which is 1. Then the corrective structure, you have it right here, which is this is our B for this impulsive swing. This is our B. And how do we have it as our B? We have a triple tree to the downside in here, which is A, B, C equals W, X, Y, X, Z. What the market now form next is very rare, which is something called ABC, and the C is an angle diagonal. If I'm going to show well, AB and C. The C is an angle diagonal, which is corrective structure. Okay, so just remove it and label it W, X, and we add our Y along there, which means we have complete our corrective structure after the impulse. We just complete our corrective structure, and this is our this is A, B, C for the W, X, and Y. Okay, and that's it. And after this corrective structure, what we're going to have next is an impulse, which is we begin a new impulse, which gives us wave 1. This is a new wave 1. And after the wave 1, we have a corrective structure of the wave 1, which is wave 2. And the corrective structure form something called a triple tree. Triple tree. Oh, okay. It forms. Let's give it a level. Is A, B, and C, which is 335. 335 is for 335 is for flat. 335 is for flat, which means we have a clean flat corrective structure after the impulsive wave, and the validation level is now around this range. These are validation level. And after that, we have another impulsive wave. And this impulse is called a leading diagonal impulse. 1, 2, 3, 4, and we ended it with 5. Okay, this is a leading diagonal impulse, and we have a strong resistance around here. Oh, no resistance. Resistance was 8. Okay, yeah, so that's it. So now we just complete a subwave of an impulse, which is a diagonal. It's called leading diagonal. After a leading diagonal, we have what? A retracement, which means what we're expecting now on New Zealand USD is a retracement of this leading diagonal. After a leading diagonal impulse, we are going to have a retracement of a trade corrective structure. Okay, and don't forget this is weekly time frame, which means now you should be looking for a sell position, and this is our foundation level. And for the sell, the validation level for now for the sell was we have our A. We're going to shift our validation level. For now, the validation level will be around A for now. Then once we have our A, because this is what we're expecting now, a corrective structure of ABC or double tree. Double tree. So if we have our W completion, that is when we can shift our validation level from where it is to a new place. Because if you shift your validation level to this range, the market might still form some stop loss out. Take some stop loss out, then boom, hit your stop loss before going with W, which won't bode well for your account. So it's better you just place it here. You know the market can come to this range because of this resistant level. It doesn't have enough volatility to break out of this resistant level and start going up. And this show a clean diagonal, which is a leading diagonal. After a leading diagonal, we must always have a corrective structure, which will correct this impulsive structure. So this is what we're expecting now in the market. We want a retracement of this, and for this, you know the market can't touch this level. Alright, this is the next validation level. If this is considered a diagonal, the validation level for this diagonal is this. So we have a retracement and can never end beyond the starting point of this diagonal. Okay, it can never end beyond the starting point of this diagonal unless your wave count is wrong. So now, if you are trading, let's shift to daily time frame so you can see it clearly. So if you feel like trading gold, it is better to just choose pairs like this to trade. Okay, choose pairs like this to trade. And one of the reasons why we love trading New Zealand USD and should take it as gold twin is because it doesn't change randomly. If New Zealand USD is going buy, it will go buy for a long period of time. If it is going sell, it will go sell for a long period of time because it is linked by factors that doesn't change randomly. These are the type of pairs you need most in trading. Find pairs that is linked by factors that doesn't change randomly, and you'll be grateful for the help once you find that type of pair. We have another pairs like that, but I'm gonna tell you this is the one I can give you for now. You can do your own research and find a pairs that is linked by factors that doesn't change randomly. So we know New Zealand USD is linked to commodity, and the economic data doesn't change randomly. The interest rate doesn't change randomly. Those are the things you will search to find the right pair for you. The economic data doesn't change randomly. Interest rate doesn't change randomly. The commodity prices doesn't change randomly. Those are the pairs we look for in the market. And now I think we just form a trade. Then what we form in the market now is called what we form in the market now is called a flat, flat, flat structure. Okay, our focus is here, right? So take let's take the invalidation level here. Let's say this is our invalidation level, and then let us see what the market have for us in here. When you go to daily time frame, this is how we spot it. On the higher time frame, then go to lower time frame to see what's really happening. So what we have in here is a flat, and flat is level A, B, C. Let us just remove this so it won't confuse a lot of traders. And these are invalidation level. If you want to buy, you want to sell, that's our invalidation level. And so you can see it clearly. We just completed our wave one. Okay. This is wave two of the diagonal, and this is wave three, wave four, cohesive structure. Then we have wave five. Wave five, this type of impulse is called third wave extension. You can see wave three between wave one and wave three. Wave three is not the shortest. Wave three is larger than wave one, but wave five is the largest. If wave five is the largest, wave three can be the shortest between wave one and wave three, which means this will give us a clean confirmation of a fifth wave extension. And after the fifth wave extension, I'm going to leave it. Let's just give it a like. Let's give it subwave one. This is subwave one. And now we are expecting the two. That's what we're expecting now. Okay, we're expecting subwave two. And for we to form these two, you need to complete this corrective structure. And right now, what we're expecting is a double tree commodity structure or a triple tree. So it's very common in New Zealand US, double tree and triple tree. So this is WSY, this ABC, which is 1, 2, 3, 4. Currently, we are in an ending diagonal. It is called ending diagonal. 2, 3, and now forming 4, now 5. We're expecting 5. The 5 will break this line with A and 3. So we're expecting 5 to the downside. This is daily time frame. So what you're expecting now is after this wave 4, you're expecting wave 5 around there. Then after the completion, this is what you should be expecting now. For now, then after the completion, we're going to update you. I don't want us to, put our focus on something else. There are a lot of things the market is trying to do, but this is what it's currently doing now. Okay, just put your focus on this pair, and your validation level should be around here because wave 4 of diagonal, which is an ending diagonal, can never come to this wave 2 territory, which means this becomes an validation level. Then you see around here. Since when the market opened, we have sell New Zealand USD because we gave the analysis before doing all this stuff now. And now we're expecting wave 5 of this wave C. So you can shift your validation level to this range. This is daily time frame. So for this week, we can just be expecting the market to come to wave C. You know what I'm saying? So this is daily time frame. Like we said, the expectation should be this. And it is also likely that we break this red line. I think we are likely to break this trend line for wave 2 to complete. Okay, this is what might likely happen after the completion of this ABC. We have corrective structure, then we will test this resistance and break out of the trend line. Okay, this is what we will expect, which will make it a WXY, right? NWXY. For now, let's just leave it as it is. We're going to update you immediately we see changes on the market, right? So for now, just trade this 5 week. That's what we are trading now. And with 5 is always caused by a small group of traders. So it will be very slow. It is likely to be slow before we reach this wave C and wave 5 of the subway diagonal. That is it for today on New Zealand USD. And make sure you do your own research by finding pairs that is linked and controlled by factors that doesn't change randomly. One of the reasons why I love New Zealand USD is because it's going by, it will go by for a long time. Go sell for a long time because it is linked by pairs that doesn't change randomly, which is factors that doesn't change randomly. Commodity, the economic data, write it down. I need you to jot this down. The economic data, interest rate, and commodity prices, and overall market sentiment. Those are the things that doesn't change randomly, and there are peers linked to it. There are other peers you can trade like that too. Okay, so this is just one of them, and it is just like twin to gold. If you don't have enough money to trade gold, if you have $100, $1,000 account, don't even bother trading gold. Come to New Zealand USD, trade it. They are almost the same thing. They move the same way most of the time, and that's it. So for now, this is our expectation. We're expecting 5 swing in here. which is 5 subway of this diagonal pattern unfolded. And that is it. You're welcome. Have a great day.